Let me welcome in Soumya Kanti Ghosh, who's the part-time 16th Commission member, as well as the Group Chief Economic Advisor of SBI. I'm also being now joined by Hiral Dadia as well to take the conversation further. But Mr. Ghosh, let me come to you first. What do you make of Prime Minister Narendra Modi's speech and the clear message that he's trying to send to President Trump in this aspect?
Yeah, thank you. Good afternoon. I think the developments over the last several days actually indicated that a trade deal with the US may be round the corner, but it's still a little bit far given the facts that there has been another 25% tariff which has been imposed yesterday. But I would like to take the positive out of it. I think the US also needs India, and India also needs the US in terms of a partnership that goes not beyond trade. So basically, it's a people, it's a trade, it's an the digital technology. So it's actually some sort of a relationship which goes beyond trade also. So my perspective is that over a point of time, there should be a trade deal, and the markets also, if you look at the movements in the markets, if you want to look at the movement in the currency, I think it indicates that the markets are now veering towards the fact that the harder is the imposition of the tariff, the more likelihood that the deal could actually come through towards the end of this month. But we must keep our fingers crossed and ensure that the deal, because as if I look into our data, Indian exports to US is around 20% of our overall exports, but US also imports 2.7% of the share. And India's actually export share of the top 8 primary commodities is close to around 50%, of which pharma and electronics are actually around close to 24-25%, which are tariff exempt. So that's the interesting part, because pharma US also needs India's help, because India exports drugs which are important for the US population. So if I take all this into perspective, I think it's a matter of give and take. Hopefully there will be some trade deal over a point of time, which will be mutually beneficial to both countries' interests, specifically India.
Soumya, in fact, good afternoon, Hiral this side. Happy to speak to you after a really long time, and welcome to NDTV Profit as well. Soumya, an interesting point that you made, that it's best to pull out the positive out of this conversation, and it becomes eminent that the next 20 or 21 days will actually be used for negotiations to arrive at a conclusion in terms of a deal. And I think that's what the markets are showing, that resilience as well. But everything said and done, hypothetically, let's still assume if we are still at 50%, you mentioned a couple of sectors. In fact, the last time we did speak as well, you had indicated a potential decline of around 3.5% in the exports to the US, with a minimal impact on the overall GDP. Any calculations on the back of the recent escalation to 50% as to what would be the impact?
See, I think we had actually estimated the impact some time back when the 25% was announced. I think our estimate was around 20 to 30 basis point could be the impact on the headline GDP. We have not revised that number because we believe that a trade deal was around the corner, and after that, I think additional 25% has been imposed. So my sense is that the sectors which are going to be impacted, I think mostly because of this, is one is the gems and jewelry, the other is the textiles, the other is also basically the iron and steel, and also to some extent the nuclear reactors. But some of these sectors are actually labor intensive. So nobody is denying that there is going to be a short-term impact on the Indian exports. If India exported 20% of its share to US overall exports, even though India has significantly diversified in the last couple of years, but there is no denying of the fact that it is going to have an impact. But our sense is that we can still ride through it, because there is a window of 21 days. The goods which are in shipment, that will go up to September 17th. So there is a hope that we are running against time, but there is a possibility that, and the US delegation is visiting India on 25th. So all these actually, and the 27th is the outer timeline. So basically it means that the talks with the US is actually could end in a conclusive deal by the 27th. So we don't have to go through the entire process of this additional 25% tariff impact. But I agree with the fact that this uncertainty could have some impact on the Indian exports, and also something on the headline GDP.
So Soumya, okay, so this is in terms of individual sectors, and we are hoping something will happen. But the latest tariff and the rationale that US has, with this number is specifically related to India's oil trade with Russia. Does this really change the long-term outlook for the Indian economy, taking into consideration the kind of imports that we're doing from Russia? And if we have to do a trade-off with importing crude from the US to some extent, how do the mathematics change, from an economy perspective?
No, I think oil, they have mentioned oil as the issue, but I don't think oil is the primary issue because US also imports from Russia. The point is that India is actually, I think, 1.7 billion barrels per day is the imports from Russia. And if I were to make an estimate of India, suppose foregoing these 1.7 million barrels per day from USA, there is no guarantee that there will be a concomitant increase in that output in the global market. So in the eventuality that India actually foregoes this there is no guarantee that it could be compensated by India buying from other markets. So the next question therefore will be, it could actually lead to an increase in the global oil prices. So it's actually in everybody's interest that we continue to buy from US and also from Russia, and also the fact that we are importing from US. But at the some point of time, there is some amount of demand basically that cannot be compensated what we are getting from Russia. So overall, and also the price difference between the Russian crude and the other crudes in the market is actually not that significant. So my sense is that if India were to say, hypothetically, that stops buying oil from USA completely, that will actually push up the oil prices, which will hurt the emerging market economies, including India, even worse, because there is no guarantee that it will be compensated in the global OPEC crude oil production.
So, Soumya, if we see an impact that comes in terms of oil prices globally as well, let's consider at least, again, it jumping up to that beyond $100 per barrel mark, that $100 to $120 barrel range, if we have to take at the high points. If that happens, what is that impact that you should be actually accommodating on India? That's number one. And two, in the previous report also you had mentioned a boomerang effect where US tariffs would lead to inflation in the US. Do you see any inflationary risk in India as well if there are any retaliatory measures or on the back of disruptions in supply chain?
No, as of now, I think we are actually not so much so much pessimistic on the oil market. We continue to believe that oil will trend in the $60 to $70 per barrel because there is significant amount of uncertainty in the global markets. So basically, and also the fact that most of the growth, export growth, has been front-loaded in the first quarter in anticipation of an US tariff hike coming. So I am not so much concerned about global oil prices breaking the $100 mark, at least in the near future. But come what may, if there is going to be an impact, if the oil prices go up, there could be only an impact on Indian inflation if that is passed through to the consumers. Otherwise, there will be margin compression of the oil companies. And I don't think there will be any pass-through of that in price, even if suppose that were to happen. So there may not be any impact on the headline inflation trajectory. But regarding the interesting point is that in all these trade wars, the US is actually going to get hurt significantly adversely. Our estimates show that the US imports actually is around 3.6 trillion. So even if we assume a 20 to 25% tariff, the impact on the headline inflation of US is currently running at 3%, could be as much as 350 to 400 basis points. So that coupled with the fact that the consumers, the prices of the US goes up, so that will hurt the income of the US population. And also there are estimates which say that it could be around $2,500 per year, more so at the bottom end of the population of the US. So it's also the fact that in this tariff war, everybody is a loser. So nobody is a gainer. Some may be a loser in the short term, some may be a loser in the long term. But my sense is that India actually has played its cards quite well till now. India has been wading through this crisis, and hopefully we should sit on the negotiating table to see how quickly we can get out, strike a trade deal with the US.
Absolutely. And then the RBI's action next is going to be key, for which I think we should connect again on NDTV Profit to understand what the trajectory will look like. That it has been a status quo this time around. But thank you so much, Soumya, for joining us on the show and sharing the views.